So my whole point is that if something is really popular and seems successful, then we know that a lot of people are going to get drawn in to trade in that way. And rather than kind of going along with it, should we be looking for opportunities to go against them?
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders Podcast.
Welcome to the Two Traders Podcast. Walter here and Darren. Today, Darren, we are going to talk about a really interesting topic that may not seem sort of related to trading at first glance. What are we going to talk about today?
Yeah, we're going to talk about, well, the idea comes from a book from Jonathan Gottschall, who's written a book called The Storytelling Animal. And, basically the book is about human beings and how we can't really operate without story. And I've got a little excerpt from the book here that I want to read, and it explains it better than I could. He says, human beings live inside a storm of stories. We live in stories all day long. We dream in stories all night long. Stories are how we communicate with each other. It's how we connect with each other, how we learn, how we think. And without story to organise your experience on Earth, you'd experience your life as a blooming, buzzing confusion. It would all be sound and fury. It would signify nothing. Story is ubiquitous. Story is powerful. Nothing in human experience rivets attention, hooks human attention, holds human attention like a story. And, when you think about it, it's, you realise that it's true. And we basically, to get some sort of order out of the chaos of life, we have to have kind of a narrative, a story to everything we do. Now, obviously, we're here talking about trading, so what are the parallels with trading? And, I always like to think about this. Why are people trading the way they do? Why do so many people trade in the same way? When I think about trading, I think of it as being sort of random chaos. So, why I'm always fascinated by the fact that most people are kind of drawn to like a small few techniques to trade. And, obviously it's, well, not obviously, but my gut feeling is that it's the story behind how they're trading that sometimes trumps the real facts, statistics and probabilities. And, as an example, let's talk about technical analysis. Now, when scientists or experts, whatever you want to call them, have tried to prove technical analysis has an edge or not, they've always either failed to prove it or been undecided. Okay, but it still remains, if not the most, one of the most popular ways of trading. So the question is, most of us know that fact. Why is it that we're drawn to trade in that way? And I want to stress that I'm not saying that you cannot use technical analysis and be really successful. Okay, what I'm trying to get to the bottom of here is what draws us to make the decisions to use those tools, and how can we understand that process to be better traders. Okay, so if we consider, say, head and shoulders pattern as an example. When someone explains to you how a head and shoulders pattern works, it's like a really clear narrative and a story, and it's easy to follow, and it's compelling, and you can see why because we love this story process that traders would believe that that's a good way to trade. And so the question is, how can we knowing this use it to make better decisions? And just what is your feeling on it?
Yeah, well, look, a couple of things pop up when you bring this up. for me, when I think about academics who study the markets, the only ones that I know who ever really made money out of the deal, I mean, there are very few that I know of. There was a book called The Predictors that I can post in the show notes here for those that are interested, and that was a bunch of physicists that got together and figured out how to make money on the markets. And there was a guy in the Market Wizards who was Richard Dennis's trading partner, William Eckhard, who also, I don't think he technically got his PhD. I think he dropped out before because he got into trading the trend before that and was working with Richard Dennis, but he also presumably made money out of the markets. Now, most of these people, when you ask them, like, for example, Benoit Mandelbrot, you know who that is, right? Darren, the chaos guy? Benoit Mandelbrot was a mathematician closely associated with chaos theory, and he wrote a book called The Misbehavior of Markets. And the only reason I bring it up is what we tend to see from the academics is this point of view that, there isn't really much you can do in terms of the markets. If you win or lose, it's just luck, and it's not likely that you can find really an edge to do much of anything. And so that's their bent. And, from my point of view, what normally happens is you get these dominant theories in any field. It doesn't matter if you're talking about physics or psychology or political science. It doesn't really matter. In any field, you get these dominant points of view, and anyone who sort of comes at it from another angle, from some sort of weird spot, is looked at as an outcast. And in the end, these people who are on the wrong side of the fence, unless they're very prolific and work very hard, they're essentially ostracized from their community. And I'll give you an example. Okay, so if you're thinking of in psychology, a lot of psychologists will study things like PTSD, right? Post-traumatic stress disorder. Yeah, PTSD. I don't know why I was thinking it was PTSS. PTSD. Anyway, so you come back from Iraq as a soldier, you're messed up, right? These sorts of things. And there's some grant money for that, so it encourages people to go along that path. But I'll tell you what, if you as a psychologist wanted to study people who've claimed to be abducted by aliens, okay, there is no grant money for that. You will get nothing published, and all of your colleagues will look at you like you're an idiot. And yet we have all of these people who claim that this has happened to them, right? So these sorts of things, I mean, this is what happens, I think, in academia. And I'm not saying that what the author claims about stories is not true. In fact, the other side of that, keeping the alien thread here, which I didn't think we'd be talking about today, but if you look throughout history, Darren, what is true is every single ancient culture has a story, and the story is very similar. And the story goes along the lines of something about we were created from these people that came from the stars. Okay, but see, what we've done is because of our dominant theory of Darwinian evolution or whatever. So we don't have any theories about how humans came about people from the stars coming and creating us. Even though every single culture, if you look from Africa to Asia, has the same story, which is we were created by these people, these gods, or however you want to say it, who came from the stars. I mean, the American Indians have the same story. The Africans have the same story. The Indians have the same story. Everyone has the same story, and yet they're all written off as myth universally. So I don't know. I think that it's great. It's a great context to look at things in terms of story. And I remember as a young kid, I was in the school bus and we were going on some sort of field trip. And there was a friend of mine who was sitting behind me. He's a big guy, and he was in the seat behind me. And in those school buses you can fit like 2 or 3 across, right? And so he was sitting there, and he had all these people around in the nearby seats. They were just locked into him, listening to him telling a story. And I remember thinking to myself, that's really cool that he can tell stories like this and that people are so interested. I really wish I could learn how to do that. And I remember thinking that, like consciously thinking, you know what? That's like such a cool skill to have, to be able to tell a story in a way that locks people in. And I think that you're right. I think there's something kind of universal about that. I think that our cognitive biases probably also encourage that. So, for example, like things like confirmation bias, where you look for things that only fit your point of view. So if I've got this theory that the aliens came from outer space and created humans, or at least, manipulated the DNA in a certain way or something like that, then I'm going to look for evidence for that. You know what I mean? Like, that's what I'm going to do. I'm going to look for all the evidence I can find for that and disregard the other stuff. So I suppose that really would fit nicely in with storytelling, wouldn't it? Where you would make this story up, and all the pieces of the story would come from those things, those that fit your confirmation bias, your overarching theme.
Yeah. But does that sort of mean that basically, so if you're starting out as a trader now, there will be dominant theories, and that's what you're most likely to hear first or most often, and so you're most likely to end up trading in one of those styles? And is that something that we should go with, or is it something that we should try and be contrarian to?
Yeah, well, I think it's definitely is going to come down to your point of view. I mean, if you talk to, like, if you go out and you talk to traditional private funds, many of them, in fact, I would argue the majority of them, they take a fundamental point of view. Now, there are some funds that run algos and all that, like the physicist that started that fund in the book, The Predictors, which I'll link up in the show notes. But the majority of them, if you talk to them, what they will tell you is, and I'm talking from George Soros across the board, most of them have an idea, Warren Buffett, most of them have this idea, and that idea leads to certain trades that they will take, or certain positions that will take, whether it's buying up companies or selling euros or whatever it is, in writing options and things like that. It comes from an idea. And if you ask them, a lot of them won't even use technical analysis to enter into these trades. They could presumably save millions of dollars if they just had one person they can consult with, assuming that technical analysis works, but that they can consult with and sort of time their entries, but they don't even do that. They don't even consider that. Instead, they have this idea, they put their money where their idea is, and then they wait. And that's kind of the normal way of doing it. And the same thing at the banks. If you talk to bank traders, they will tell you that even if they trade sort of from a technical point of view, most of the time they have to give a reason to their boss, which is fundamental. This is why I'm buying the yen. Because of this. This is why I'm selling the pound. And it's fascinating because that's sort of the dominant, fundamental analysis, sort of the dominant theme. And they look at technical, and I know it sounds funny to a lot of people who trade from home, because our dominant story is that if you want to make money, you must use moving averages and stochastics or whatever, right? MACD or whatever. That's our dominant, but that's not the case in every domain. So I just find it fascinating how it changes depending on where you go.
Is that because, the story with a fundamental approach is more complex than the notion of being able to look at a chart and simply read it and, read price action? Is it just, for retail traders, we're lazy basically, and that story is much easier and more comfortable for us than the story of, you have to take all this complex information in and come up with your trade idea that way?
I think you're onto something there, because I think the number one comment that I get from non-traders when you tell them that you trade, and I'm talking about rather sophisticated. So I have a lot of friends who are retired, right? Much older than I, and sort of like mentors. And some of them will, they've got money and they'll dabble in the stock market or whatever, in the U.S. stock market or the Australian stock market. So one of the big things that they say when we talk about trading is, how do you, the assumption is that I must keep on top of all of the fundamental news and all that. How do you keep on top of that? I wouldn't be able to do that. I wouldn't understand all that. That's kind of their bent on it, their take, because the assumption is that you must know all of these things about fundamentals and how to fundamental analysis, how to do that to make money. And I think it comes from school. So I think what happens is you learn this. Like, if you go and become an economics major at any Western institution, they're not going to teach you trend lines and things like that. They're more likely to teach you some sort of story about how the interest rates make the world go round, or why CPO and CPI and and jobs reports, and you know what I mean? That's the kind of thing that they're going to teach you, is the central bank rules and charters, and how the ECB differs from the RBA, and blah, blah, blah. That's the story that you get. So I guess that makes sense to me in a way that it would carry through to those people who are working in traditional finance careers at banks and private funds. That's my point of view. And I think you're right. And the other side of that coin is exactly what you say, Darren, which is, so the ma and pa trader, the 57-year-old guy who's at home trading the euro, through his retail trading platform, thinks to himself, I can't be as smart as the guy who's got his economics degree from Harvard, so I'm just going to have to do something different, which is just trade the charts and trade the MACD or trade moving averages, that sort of thing. So I think that's kind of his out, in a sense, is to trade in that way. I don't know. That's kind of the way I see it. I don't know if that's true, but that's how I see it.
Yeah, I think it's right. And although, the strange thing is, I imagine these funds and traders, the techniques and ideas they're coming up with will be less about pouring through economic figures, and I imagine they'll probably be using a lot more feel rather than, any sort of strict strategy about, when the interest rate is X and the COT data is blah blah blah. I think they've probably just got use more an element of feel in their trading, and that's something that you can kind of end up with from starting out from a technical point of view anyway.
Absolutely, and I think you're right. If you talk to some of these traders who are in traditional finance roles at a fund or at a bank, what they'll tell you is they have information overload. Okay, so they have analysts who are sending them reports on the end. And so what they really have to learn is to weed out information and kind of put blinders on. And so you're right, and I think confirmation bias plays into it. So if you talk to the trader who's running a fund and the fund has a certain idea, they're going to look at evidence and reports that support their idea, and they're often going to disregard or discount those inevitable reports that they're going to come across, those articles and stuff, which is not the same. It doesn't fit the story, because confirmation bias makes that happen. I'll tell you an interesting story that just happened to me yesterday. So I have a really good friend that I go surfing with, and he's I don't know how to say this. He's a very well-established financial journalist. Okay, he's been doing this for decades, much longer than I've ever been trading. And you know what he tells? Because I was asking, my question was, I was trying to get him to tell me if there are any stories that are basically off limits. That when he starts to go down a certain path, his editor comes in and says, and by the way, his articles go around the world, right? He works for a company, I'm not going to say which one, but their stories are picked up around the world, and he's on TV when they, talk about the economy or whatever, or different things. So he's been doing this for a long time. And I said to him, so is there anything that you can't talk about? That you start to go down this path, and and I've got the conspiracy bent, so I'm thinking, is there anything like in terms of alternative energy that the oil companies stop him from, you know what I mean? That sort of thing, like that's off limits. You can't talk about, cars that run on air, or whatever, or water or something like that. That was kind of my thinking. And then what happened was, I was like, and so I'm waiting for this, I'm waiting. Okay, what is he going to tell me? What is he going to tell me? And you know what he tells me? He says, the biggest thing is we'll get these stories that come in from, say, like Goldman Sachs. Okay, this is the example that he used. So Goldman Sachs comes up with this story about, say, gold. All right, and so they'll send him some information about gold, and and I don't know if you've heard this before. I've heard this before he mentioned it, but one of the stories about gold, Darren, is that the wedding season in India can affect the gold price. Have you heard this before?
Yeah, definitely, yeah.
Yeah, so I thought it was the first time I heard this, I thought this is crazy. But so the story is in India, all these people, the wedding season is basically, I think, around like August through October or something like that. It includes September, I think. And a lot of people in India get married, and one of the things that they get, gifted is gold. Gold is a pretty common wedding gift over there. And so because there's so many people in India, right, it can really affect the price of gold because so many people are buying gold at this time of year as wedding gifts. And so he said, Goldman Sachs will send them a story and say, look, you should really be running this. And do you know why Goldman Sachs is sending them the story about how gold is going to go up and wants them to pick up the story and send it out to all the wires and everything? The reason why Goldman Sachs wants to do that is because Goldman Sachs wants to sell gold. And because Goldman Sachs wants to run the gold price up and then take it down. And that's what they do. So that's one of the things that I'm so concerned about, because I know this goes on. If I'm going to become a fundamental analysis trader, how do I know that story that's written by Bank of America or whatever, whoever, Goldman Sachs, that I'm reading, and their expert analysis is that gold's going to go up? How do I know that they're not just pumping it up to dump it on me? And then, you know what I mean? Because because here I have a financial journalist that says that's one of the biggest things that happens to him all the time, is trying to weed out these crap stories where these brokers are trying to run things up or push things down so that they can get a better price and go the opposite. So I just thought that was fascinating, and I think for somebody who's trying to use fundamental analysis or create a story in your head about where the markets are going, I think it's tricky. And the reason why I think it's tricky is because I think you have to be very careful about how you're going to do this. Yeah, I don't know how to do it, I guess is what I'm saying. I don't know how you can do this. Yeah.
Yeah, and it's kind of the point that I'm trying to make, is that the dominant story, however you trade, fundamentally or technically, is that best avoided, because that's open for people to speculate and take advantage of that. People with more money and more smarter people with more money can see that that's the dominant story, and people are going to get sucked into that, and therein lies the big opportunity. Like when you're talking about where you look at the balance between shorts and longs, and when it gets stretched to one extreme, that's the good time to be trading. So when there is a dominant story in control, then you want to be looking to be contrarian towards that. And so my whole point is that if something is really popular and seems successful, then we know that a lot of people are going to get drawn in to trade in that way, and rather than kind of going along with it, should we be looking for opportunities to go against them?
Yeah, absolutely. I mean,
do you see what I mean?
Oh yeah, totally. I think to me that's a no-brainer. I think you're right. I think the point is, okay, let's take a step back. What happens in the markets? So we know that most people in the markets don't make money. Even if a lot of people make a lot of money for a certain time, it doesn't matter if you're talking about Beanie Babies or, Malibu homes. What generally will happen is a very small minority in any market, whether it's Apple stock or euros or whatever, a small slice of the overall market makes the lion's share of the money. So what are they doing? Well, they're doing something different. They're not doing what everyone else does. So if everyone says it's a no-brainer to buy Apple stock, if you see that 99.8% of the traders are buying Apple stock, maybe it's not going to go, who else can come in and buy it, right? I mean, these are the sorts of things. I think you're absolutely right. So that's the way I look at it is, and I can put a link in the show notes here if you guys want a video on this idea and how to find these data. But the idea is exactly that, what Darren just said, which is, look, if everybody's doing one thing, almost everybody's doing one thing, and we know that almost everybody is going to lose consistently or ultimately, and we want to make money, maybe we should do what not very many people are doing. And that's, to me, that's a pretty simple approach. It's difficult to do because everyone looks at you like you have three eyes and they say, you're crazy. Why would you do that now? That's dumb. Everyone's buying Apple stock now or whatever. Of course the euro is going to go up. These are the sorts of things that you have to fight, and which means reading the newspaper, reading the financial news, watching the financial channels, all of that is going to point you probably in the most likely in the wrong direction, because they will put contrarians on there occasionally, but it's not normal. And if you sit and watch any of these financial channels, Sky News or Bloomberg or whatever it is, you'll hear a lot of the same story, just in slightly different terms. And then occasionally, just to make it interesting, they'll throw someone up there who completely disagrees with everyone. But that's not normally the case. And so I don't know. I find it fascinating. All right, that's it for part 1. In part 2, you'll find out all about lucky football jerseys and how this relates to your trading, picking lotto numbers, and what this means to system traders, who Darren wants to sit down with, and why sitting down with this person may help out his trading quite a bit. You'll hear my story about Michelangelo and the fund trader's secret to success, which is completely very obvious and simple. And then finally, why your friends are always better people than complete strangers, and what this thinking mistake means for your trading. All this in part 2. See you next time.